to this week's webinar. If you're watching the recorded version of this, it was held live on Wednesday, the 24th of January at 12:30 in the afternoon. So this is a webinar that we do every week on a Wednesday lunchtime, and it splits down into a couple of parts. The first thing, we'll look at the markets. So we'll look at the major markets: euro, pound, gold, oil, and a couple of the major stock market indices. See what's been going on over the last week, and what are the levels to look out for, where the opportunities might be in the days to come. And also another part of the webinar is sort of education trading strategy bits. So we normally do sort of 5 minutes on something every week to hopefully help us better identify opportunities or manage risk or whatever it is when it comes to the markets. And this week we're going to do the ever popular subject of oscillators. Okay, so let's get cracking. Let's take a look at what's going on. So what we're using, this is Aondo's Trade Hub platform. So Aondo may be better known for social trading, where you can copy other traders, but also you can trade yourself as well. So this is their sort of full-blown trading platform. I think we've got to start off today with the pound against the US dollar. Why does it always do this whenever I start? It won't maximize the chart properly. There we go. It's a daily chart. Let's flip it over to a weekly chart. I mean, I've been positive on the pound against the dollar I think for much of the last 12 months, but I am surprised by the move we've seen over the past week. It's trading at 141.50 ish now, so we've pushed right back into that post-Brexit vote range from the 23rd of June, wasn't it? So it's been ever since we broke out through these highs at 136.60. It has been going like a train a bit. Let's just flip it onto the dailies. Here we go. So the break it was the old September highs. Let's just pick those up. There we go. So 136.60 was the break a couple of weeks ago. And you can see we've had one down day, one red candle in there, and the rest of it has just gone racing away. I must admit, I find it hard to trade a market like this, where it just ends up being one direction. I think for me, I'm either in or I'm not. I think it's quite hard to just buy in, because even now, it's on the highs for the day. So I think there's almost an element of if to buy into a trend like this, just jump on it and hope. Just buy in and hope the momentum continues, because I think it's quite hard to know where to place stop losses. I mean, over the last few days, or over the last week, I should say, placing stop losses under the previous day's low would have worked well, because the market hasn't really looked back, but that would mean, where are we at the moment? So yesterday's low is 139.16. So you're going to have a 250-ish point stop, just on yesterday's low, because of the size of the moves. So I do find these moves hard to trade. I think that the opportunity for me, anyway, will be when this market starts to sell off. When it sells off, see a bit of strength come back in, then we have maybe a more logical point for a stop. But I think the important thing for markets like this is not to stand in their way. I think it's incredibly tempting when we see, particularly in FX, because we don't tend to see such massive runaway moves in FX that often, so it can be tempting to go the other way, and that's fine. There was an argument for doing it back here the 19th of Jan when we had that down day. It was struggling with its old highs. But I think you've got to be quick to get out of the way if it does go against you and breaks out through highs. So all positive for the pound, despite Brexit, to put the famous phrase in there. So yeah, markets seem to think that maybe we're going to end up with a better Brexit deal than maybe we were thinking a year ago. Let's see what happens. But there's our trend. So there's our trend. I've picked on that back from March of last year. You could take it from down here. So lots of support at 134, which is 700 points away from where we're trading now. Because of the moves that we saw on the Brexit night, there really wasn't much left in terms of highs and lows. And I think there were maybe plenty of people thinking, well, it is going to stall back up here. So I think there's an element of short covering fueling this as well. People betting against the rise, the market pushes higher. People buy back to close their positions, and it just fuels the market going up and up. So, I mean, let's try and pick out some levels. I mean, it's probably looking at the old lows before the vote, but I think we're through those anyway. There we go. So 140 was an obvious level. Those lows where it was faffing about before the vote, then rallied into the vote, and then of course fell off a cliff. I think it's a difficult market to call, but it's strong, you know. So I think if we get any sell-offs, that's going to be the opportunity. Let's take a quick look on the hourlies and see if we're actually left with anything on the hourly chart. Here we go. So here's our hourly chart. The break was 136.60. So here was the breakout back here a couple of weeks ago, and we've got, you know, we do have pockets of support left. You know, I think if, like I say, if we do see this market start to sell off, there are definitely going to be opportunities. If we thought, which I do, that the rise for the pound is going to continue, you know, if we do sell off towards that low from yesterday, 139.20 is the first obvious one. Then we've got 138.40, then 137.60, then 137.20. So stacks of support. If we did see a bit of a handbrake turn for sentiment, but incredibly strong at the moment. Plus, of course, is the US dollar weakness. I've been surprised that this dollar weakness has carried on. We'll have a look at dollar yen in a sec as well, but we are really, you know, last year was the worst year for the US dollar since 2003. It lost I think just over 10% last year, and it has prompted lots of negative forecasts for the dollar for this year. And there's always the tendency, I think, when everyone thinks the market's going to go one way, it's exactly the time it goes the other way. But for now, that is how this year has started. We've seen further dollar weakness, so clearly that's not harming the case for the pound going higher either at the moment. So there's pound US dollar. That is, you know, quite the move, but it is in line with that trend, that recovery trend that's been in place for about 12 months now. You know, so I don't know what's happened to some of that. I think HSBC were forecasting 115, I think, for the pound. We could get there, but it's got to have a bit of a turnaround for that to happen. Let's see. But I think, like I say, the opportunity I think will come when we see this market sell off, when we see a bit of a cooling off from the strength. But let's take a look at something a bit more normal. Euro dollar. Euro dollar's been interesting. It's interesting now, actually, even as we speak. It's interesting. So here's the last, what is it, the last year for the euro against the dollar. So we had the trend, market fell out the trend, false breakthrough here that came to nothing. And since November last year, we have had strength in the euro. So we've got our trend maybe looking something like that. Last week was a bit of a non-event. Let's just jump on to the hourlies and see the last week. So last week, I think the range for the week, it was a really tight range. I think it was only, I think, just over 150 points or so, I think, something like that. So the low for the week was 121.60, the high for the week was 123.20. Yeah, so 160-ish point range for the euro dollar over the last week. So it was a pretty tight week in terms of range. But you see today it started breaking out. So this is interesting, I think. So, you know, how could we trade this? Well, an aggressive trade would be to be a buyer now. Where's the market now? 123.34. So be a buyer now and put a stop just under that breakout low. So just the other side of 123. It's maybe a little bit too aggressive for me, but you know, it's an idea. Also a bit deeper into the range. You know, a bit below maybe these old lows from the 23rd of Jan. So yesterday afternoon lows. And maybe a more relaxed stop is down below here. But I think it's interesting that we've started to break out on euro dollar. So I think that's an interesting one to watch. Let's just flip it over to the dailies and look at some targets. I don't think there's much in the way of problems. Let's take this right back. There's a lot of fresh air. Maybe if we make this a weekly chart, it'll make a bit more sense. Here we go. So this is where we are now, 123.36. I still think 126 is the obvious next target. So 250, 260 points higher than where we are now on euro dollar. You know, it doesn't mean it's going to get there in a straight line. But again, if we go back to the dailies, I think like pound US dollar, there's lots of support. You know, if we pick up, I think the main thing to watch on the euro dollar is the trend from those lows back here, back in November. You know, big support at 119. It's a long way away from where we are now. Then support from the other week down at 121.60-ish. So I think plenty of pockets of support if we do see the euro weaken a bit from here. But that breakout's interesting. That after spending all of last week stuck in a range, we're seeing it starting to move again today. Of course, tomorrow's Thursday, isn't it yet? So we've got the latest from the European Central Bank, so the interest rate decision tomorrow. So we could see some volatility normally over that, but the break today is a positive one. Let's talk a bit about oscillators, and then we'll have a look at dollar yen. Then we'll get into some of the other markets. So I do have mixed feelings towards oscillators, and I think one of the problems is, clearly we've seen an explosion in retail trading of FX and other markets in the last 15 years or so, and now trading platforms, and Aondo is no different, have not quite 1,000,001 different oscillators, but they have. Here we go. Here's the list. We're only as far as the F's. Absolute loads of them. And I think the problem is that the real problem is, I think for new traders, they end up playing about with these things so much, believing that, okay, somewhere in here, there's a holy grail. If I can just get the settings right for my random action verification index, which I've never heard of before, if I can just get the settings right from that, then untold wealth is going to get delivered to me from the financial markets. And they miss out on real basic stuff like this, like the breakout on the euro or the massive strength that we've seen in the pound. So I do have something of mixed feelings towards oscillators, but it doesn't mean they don't have their place. So let's take a look at a couple of popular ones. So we'll take a look at the RSI first of all. So a relative strength index. Let's see what it's telling us about the euro at the moment. So I think the textbook setting for an RSI is 14 days. Personally, I always change it to 10 because I think for me 10 makes sense because it's 2 weeks, so 2 trading weeks on the RSI. So let's just zoom that over. So oscillators, in case you didn't guess from the name, are called oscillators because they oscillate from one extreme to another. So typically anything below sort of 30%, the market is said to be oversold. Anything above, like here, above 70%, the market's said to be overbought. So this worked well here on the highs in November, but has not worked so well here. And this is one of the drawbacks of oscillators. I think it's knowing when to use them and what sort of market you're in. One of the drawbacks of oscillators is in a strong trending market. Actually, let's flip it over to the pound because I'm sure we'll have some comedy signals there. Here we go. In a strong trending market, they will get you to go against the main move in the market far too quickly. So here we go. So the oscillator went overbought on the 12th of Jan. So it was telling us to sell the pound at about 137.20 on the 12th of Jan, and the market is up 400 points from there since then. So we've seen this big move. So I think this is the problem. They go to an extreme far too quickly. So maybe a sort of more sensible way of using them is to trade them in the direction of the trend. So if we've got a clear uptrend like this, I'd suggest using oscillators to buy into the trend. Saying that, we've got to go back to October last year to get the last oversold signal for the pound because the market's been so strong. So they do have their uses. Then they do help us maybe gauge the temperature of the market, but they're no holy grail. Let's flip them over to an hourly on the pound and see what they're telling us. There we go, overbought again, not surprising. But maybe we could have used a weakness back down to the low 30s area as an opportunity to buy in. That was a reasonable signal. If we were looking at the shape of the RSI, we saw it dip down until the market dipped down 23rd of Jan. We had lots of support to set our stop below if we thought the market was going to rebound again. It didn't do too badly there, but they're not a holy grail. So I think you have to be careful when using them when markets are moving really strongly. But let's keep it on there for now, and let's take a look at dollar yen. I must admit, I've been surprised by this weakness, overnight weakness in the dollar against the Japanese yen. Let's bring it up. Here we go. So again, just accelerating that dollar weakness that we had all last year. So we did see maybe a little bit of stability coming in for dollar yen over the last week ahead of 110, but it went sailing through that level last night and has moved about 50 points lower since it broke through 110. It doesn't really change. It's been a bit of a boring market the last year, you could say, dollar yen. It's been sort of trapped in a range, but I think it's going to be interesting. I mean, I do think that maybe everyone is getting a little bit too pessimistic about the US dollar, and clearly I'm a bit early on that because it's been weak. over the last few days. But I think maybe dollar yen is the one to watch here to see what happens if we head back to the lows from last year. Okay, it's a couple of 100 points away from where we are now, but it has moved nearly a couple of 100 points in the last couple of days, 150 points anyway. So I think it's going to be interesting. Maybe dollar yen is the one to watch as the dollar barometer to see what happens if we have a look at those sort of low 107s again. If we look at the RSI, let's just stretch this out as we're talking about oscillators. If we look at the RSI down here, oversold, but again oversold for a while. The market carried on going lower. It's come out of oversold, the market's rallied, but it's dipping back in again. And this is where we may have another setup, this idea of what's known as divergence, where the market does one thing, but the oscillator does something else. And the setup here would be if the market, looking at it now, if the RSI hooks up, we have what's known as bullish divergence. So the market's pushed to lower lows, the RSI starts making higher lows, maybe. It's not doing it yet. And this can be a suggestion that maybe that weakness is running out of steam. We've got a good example back here, back in the lows from the summer. It's a bit of an extreme example, but dollar yen hits a low in August, 11th of August, rallies a bit, but then moves down a month later in September, but the RSI has started trending up. Okay, so this can be a sign that maybe the weakness is running out of steam. We did have it back there as well, actually. Market hits a low in June last year, trades a bit lower later on in June, RSI is making higher lows. So I'm just wondering, is this the start of a setup here? But for now, it's still weak. Dollar yen is still weak, but I think it's maybe worth keeping an eye on over the next few days to see if we do see some buyers come back in and what happens with this RSI down here. But pushing back to its lowest levels now since September last year. So that dollar weakness theme continuing. Right, let's leave currencies alone for a minute. Let's go and take a look at stock markets. And of course, we will start with the S&P 500. And of course, I'll say the same thing I say every week, it just goes up. Okay, this is a market that continues to defy gravity. It's a market where if you looked at the positioning of your average retail trader on this index, the average retail trader is short. Okay, so most people are betting that the market is going to go down, and every week and almost every day the market goes up. It is a bit of it's ludicrous really, but you can't argue. You can't argue with the trend. The sensible way to be positioned in this market is to expect higher prices. Volatility is really low. If you've heard of the VIX, the VIX is a classic measure of stock market volatility for the S&P, and it's at record lows. We just don't get the swings during the day. I mean, it is incredible the move we've seen. I mean, what's it done just this year, the S&P? So if we went for the end of last year, so it ended last year about 26,666, spookily enough. And it's now trading at what, 28,444. So it's up not quite 200 points, 180 points. Okay, so that's still whatever that is. I can't do the maths. 5%, something like that for the year so far. Incredibly strong market. Let's have a look on the hourlies. You just got to be a buyer on dips. As and when these dips come, and they just don't last very long. I think one thing, if you really want a short-term trade indices, given how strong markets are at the moment, one of the things to look at is the previous day's high and low. If it starts selling off towards yesterday's low, well, the buyers came back in yesterday, so we'd expect a similar thing to happen today. Where's yesterday's low on the S&P? I'm presuming it's here. This is the out of hours low, and there's the in hours low during official trading. So 28. So for today, 28.27 to 28.32, but the market is already at 28.44. Big support way back here. God, it is a mile away, isn't it? It's like 70 points away, and it's only where the market was just over a week ago. It just keeps going up. There's not much more to say. Apart from that, if we flip it over to a daily, I think we all worry about stock market crashes. But just to put this into perspective, if we went back to sort of the low after the US election last year, or in 2016 now, isn't it? There's our big trend. We've got even if the market dropped 300 points from here, so 10% from here, that trend is still very much intact. And if we went right back How far back can we go on this? Let's have a look. Can we get back to 2009 to the low lows? Here we go. So what does that trend look like? Let's just pick up on that. So the low was actually 666 on the S&P, spookily enough. But our big trend, looks it's miles away from it. The market would need to drop nearly 800 points. So that's a 30% slide, isn't it? Near enough, a 25% slide from where we are now to threaten that trend. So at the moment, stock markets, US stock markets, the trend most definitely up. Look at the RSI. Again, this highlights the problem of RSIs. Okay, this is a long-term chart. This is a weekly chart, but it's been overbought since September 2017, and the market is 400 points higher, nearly. So the RSI would have got us to go against that trend far too quickly. So there's the S&P. To bring things a bit closer to home, let's have a look at the FTSE. So is that a daily chart on the FTSE, or is that a weekly? Okay, let's flip this over to a daily chart on the FTSE. There we go. So we had that break finally on the FTSE. So we had that level for all of last year. Oh, not for all of last year. The second half of last year, the market could not get through 7,600. Broke out. It's traded up to nearly 7,800. It was a bit lackluster, the FTSE, and of course, this strength that we're seeing in the pound is sort of scuppering a little bit the strength in the FTSE. Because so many of the FTSE constituents make their money overseas, so a strong pound doesn't help their P&L when they convert it back into pounds. But let's flip it over to the hourlies and look at some levels. It's arguably a trade here. If you really wanted to buy the FTSE, I mean, we would need the pound, I think, to stop going up. But there's a big level coming in from what's that? Just under a week ago, ahead of 76.80. And we've seen over the last 4 hours, some support coming in here. So there's maybe a trade there. Maybe stops below that level, 76.65. So a buyer, wherever it is now, 76.94 and a bit, and a stop, I don't know, maybe 40, 50 points away, and see what happens here. So I think that's an interesting one to watch this afternoon. Do we see the FTSE hold above this 76.80-ish level from just over a week ago? So, but the pound there is clearly doing, quite a bit of damage to any FTSE strength with it going up. And one last one before we take a look at gold and oil. Let's take a look at DAX, the old German market. Oh, this is interesting. I never look at the DAX. I never look at the S&P. But breakout time. So we had. I mean, I think it's a tricky one, the DAX, because it is so volatile. But we had the old highs from back here from June at 12,950. Market broke out. Took a while actually to break out. It sort of faffed around a lot during October, but then moved higher. So we moved up to 13,550. So let's pick up on that, 13,550. And just yesterday has broken out. So again, it would tend to suggest, this market is going to go higher. The difficult thing, I think, as usual, is where to put the stop. For me, probably the logical place. Oh, where's it gone? It would be back under here, back under 13,390. So the lows from earlier in this week, maybe. But that's interesting that the DAX is breaking out through those old highs. So that would be normally bullish. Right, let's take a look at gold and oil. Which one should we do first? Let's do oil. US oil. Here we go. And it's the same as it was a week ago for oil. We've got to be a buyer on dips. Big levels have gone already on oil this year. We've had, I haven't got enough data here, but 63 was a big level from a couple of years ago, or a few years ago, and that's been broken really quickly. It pushed up. What's that? 15th of Jan, traded as high as 64.80. We're currently within, well, we're there nearly. 64.79 is where it's trading now. But with oil, a bit like the S&P, not as extreme. The trend is clearly up. So any weakness in the price of oil looks like a buying opportunity. It's only if we start to lose maybe the 59 area, $59 a barrel, does it start to look as if the price of oil is in trouble. Let's flip it over to an hourly and see what levels we should keep an eye on. There we go. So big support down here, down at what, 63. So 62.70 through to 63. So if we saw it sell off a couple of dollars from here, it looks like an opportunity. But a breakout, breakout through, let's say $65, who knows? You might see $70 a barrel pretty soon. So, but still really bullish, based off that daily chart. It's been in a trend since June last year. The price is up more than 50%, the price of oil since June, and that trend is still going strong. And then finally, gold. Oh, look at gold. It's a dollar weakness again driving gold. I must admit, I'm surprised it's this high, the price of gold. And that's quite a move now that we've seen since December the 12th. So 6 weeks, it's gone from 12.40 to 13.52. So that's nearly a 10% move in the price of gold. Clearly, US dollar weakness playing its part here. But the interesting ones to watch on gold is going to be the highs from 2016, which come in there, 13.75, and then the highs from last year, which come in there, 13.57. So we got this whole band from 13.57 to 13.75 on gold. We do have a few other little pockets left back here as well, but for now it's still strong. But I'd be a bit cautious personally, when it runs up to these big old resistance levels up here. But for now, definitely still strong. So maybe again, if we see that level break, that 13.75 level break, it's 1400 plus. Looks like the next target. And even if we see it retrace all the way back to where it was in December, it still looks like a buying opportunity. So I'd be a buyer, but maybe not up here at the moment. Let's see what happens with this sort of 13.75, 13.57 to 13.75 area. Let's see what happens with that up there. Yes, we'll see. And I think that's it, isn't it? Oh, sorry, I missed the questions here. There's a couple of questions. I do worry about the influence of the ECB tomorrow. I think it's going to be volatile, for the euro tomorrow over normally. So the interest rate decision is 12:45 UK time. There tends to be very little that goes on in the market when that comes out. But it's the press conference after from 1:30 that tends to cause the volatility. And we have seen, some big moves for the euro on the press conference when they outline what they think they might be doing with interest rates and quantitative easing, all that sort of stuff. So maybe wouldn't want to be trading the euro just yet. Maybe let's wait and see, get the press conference out of the way tomorrow and see what it looks like after then. But it's positive, based on what we've seen the last however many months it is, last 3 months for the euro. It's positive. The breakout today is positive. So any weakness looks like a buying opportunity. Pound US dollar really is going like a train. I wouldn't be trying to go short this market. I think for me, the way to trade this, let's wait for the sell-off, see where it stops, and look to buy back in then. And it's a strategy that would have worked well all the way in this trend. And US stock markets still going higher and showing no signs of changing. So I could just record a little soundbite every week, I think, for the S&P, because I've been saying the same thing for, it feels like forever now. But that's a market that's still going up, still setting fresh all-time highs on a weekly, if not daily basis, and I would not want to be the other side of that market either at the moment. We'll start wrapping things up there as usual. Any questions, drop me an email. The best, I think my website is down at the moment. I haven't figured out how to fix it, but emails are still getting through. So if you email me, david@tradeafter.com, I'm more than happy to answer any questions if there are any. And you can follow me on Twitter for market charts and stuff during the week. But all the trends that we were looking at over recent months are all still very much intact, and I think it does. The pound's the extreme one, but I think it does demonstrate the importance and the benefits financially of usually trading with that trend. And it really has gone ballistic in the last week and a half. Let's see where it is in a week's time. But we'll start wrapping things up there as usual. So thanks for coming along. Let you get back to your afternoons, and we'll do it all again in a week's time. Okay, have a good afternoon.